Hey, good midday, everybody. This is Greg Michalowski from FXDD in New York, and this is the midday London close Forex report for March 8th, 2010. Well, saw the euro and the sterling move up early in the New York session, then come down pretty hard here this morning. And through that move to the downside, we broke through some key technical support levels. We'll start off by taking a look at the euro versus the US dollar to get things going. We were talking earlier this morning in our morning report about the 136.91 level. This level corresponded with the February 23rd high. We had a high here of 83 as we had early sellers against this level right here. And then when the market was able to break through on this day right here, we then used the level as support. I'm going to zoom in here just to give you an idea of that support level and highlight that area, how the market found that support at the level. When the market broke through there, we used it as resistance. This often happens, a support level then becomes a resistance level, and the market moves sharply lower from that level. Now today, what we saw here was the market move higher initially in the Far East London session. We used that level as resistance once again, and then this bar right here was when the market moved above it, but it quickly rejected that level. Then the market moved lower, and lo and behold, during the New York session, what did we do? We went up and tested at 136.91 once again. So going back in time, this 136.91 level is a key level. It proved to be a key level, and the market used it as a level to sell against, and that caused the move to the downside here today. The other key level that we are looking at in this chart is a 136.54 level, and if you go back in time, you can see how 136.54 broke through it, used 54, 54, 54, 54, all the way along, and that level was a key level also for the U.S. versus the euro versus U.S. dollar. And you can see today when the market was able to break through that level, we did see we came down, tested the 100-hour moving average. That's the blue line in this chart, another level that we often look for support or resistance. And then we went back up, and where did we go? We went right up to the 136.54 level before then falling down, breaking through the 100-hour moving average and moving down to the low for the day. You can see this very clearly in the 5-minute chart. I often like to look at both the hourly and the 5-minute chart for directional clues, and we apply the same type of logic to this. There's resistance up here at the 136.91 level. You can see that very clearly here in this chart on a number of different occasions, how the market used that level as a resistance level a number of different times. Another key signal is this 100 and 200 bar moving average converging at the same price. When the market moved through that level, the market fell off. Then we went through the 54 level, and where did we go? We went down to the 32 level. That was our 100-hour moving average, and then we corrected one more time up to the 54 level before it started to move to the downside. Now, after bottoming here at 136.05, market has moved back above the 50% retracement of the move up from the lows on Friday to the highs. That level comes in at 136.17, and this is causing some short covering here with 136.22 coming back into play for the euro versus US dollar. Above, if the market's able to get through, look for resistance at 54. We're just playing these ranges here, folks. We're just playing the technical levels that we're seeing here in the charts, but look for initial resistance against the 32 level. Again, that's a 100-hour moving average. Let's move on to the sterling versus the U.S. dollar. I mentioned that this currency pair also was sold off sharply, and you can see that the market when it broke through the 200-hour moving average, that 200-hour moving average comes in at 151.33. The market started to sell off rather dramatically. That's this level right here. The market went below the 100-hour moving average, or another target on the downside, and corrected to this 150.37 level before rebounding here up to 150.60.